Welcome back to Crypto Zones, peer-to-peer financial empowerment, hashtag LoveAllServeOthers. 3 major Fintech Trends 2020. Those are, number 1, central bank digital currencies, a.k.a. CBDCs. Number 2, the influx of institutional investing into cryptos. And number 3, decentralized finance, or DeFi. Just like to encourage you to click the like and subscribe and click on that push notification so that you get my videos as soon as they're uploaded, because I kind of feel like I don't say what YouTube wants me to say. So appreciate it. Number 1, the trend of central bank digital currencies. And if you think that they are not going to be coming down the pike, well, you really just don't know what you're talking about. You really don't know what's going on here, really. And if you think I'm crazy, well, that's fine. Just check that and remember that. And then in a year or two, when all these things come to fruition, look me up again, and no love lost. We'll just discuss how we can synergize coexisting in a world of central bank digital currencies. But in the spring, or it was in 2019, I think, in the summer of 2019, at a meeting of central bankers in Jackson Hole, Wyoming, the then head of the ECB, the European Central Bank, did a noontime speech, and he said, "Hey, I think we should do a central bank digital currency pegged to 5 nation-state currencies: the US dollar, the British pound sterling, the Japanese yen, the euro, and I think he mentioned the Chinese yuan." And when I first heard that, I thought, oh, no way. But then when we look at history and see how the nature of central bankers is to come out and say, give us little snippets of what they've already been planning. And when you fast forward to today, we look just a very, very short time ago, hardly even 10 days ago, the IMF came out and said, hey, let's get a Bretton Woods 2 going so we can talk about this central bank digital currency. And at first I thought, well, look at Bretton Woods number 1. Those of us who know about that happened when we saw the end of the tunnel for World War II. They got 44 nations together in 1944 for over 20 days to discuss a reset, as a code word for central bankers, of the global economic system. And they chose the US dollar as the world reserve currency, and they pegged the dollar to the gold at $35 an ounce, essentially resetting the global economic system. Pardon me. And so that was at the end, that was coming out of the ashes of a 1929 economic crash, and a lot of nations having their infrastructure just devastated and destroyed. And so that was cataclysmic. And I'm sitting here thinking, well, what is so cataclysmic that's going on right now that would cause a Bretton Woods 2? But when we look at the nature of the 2020s being completely a different economic system, and also technologically, there's a lot of things going on. We could think of the global health crisis, the global civil unrest crisis. And when we look at technology, really, there's war being waged. There's still war being waged, although today in the 2020s, the war is being waged for digital economic kingdoms. Whereas previous to that, it was wars that were waged for gold and silver and natural resources and diamonds and things of that nature. Still an economic war, but today the economic war is happening on in the digital kingdom. What is cataclysmic is inverse in nature. What I mean is, although there was this cataclysm going on preceding Bretton Woods and preceding a change in the economy, what would happen with a Bretton Woods 2 and central bank digital currencies being released and developed, the cataclysm would really happen after all of that. Because what will really happen, we think, is that, well, we do know some things, that when central bank digital currencies are released, what happens is all of the, there's over 200 different nation states, but assuming all of them get a central bank digital currency, their currencies will still exist in design the same way, but it'll go from analog onto a digitized version. And what they'll do is, hey, turn in all of your currencies. We'll cancel all those out, all the money in your pocket, the greenbacks and all the coins, turn that all in, and we'll give you similar or same amount of value on ledgers. And we'll cancel out all the bank ledgers that you do have, but here we'll give you all this money, and we can say good, but you could say goodbye to your personal privacy. That is absolutely for sure. And also, what that would mean is essentially, instead of us being able to bank with whoever we want to, if we so chose, JP Morgan or HSBC or Wells Fargo or US Bank or Bank of America or Citigroup, instead of all those, then we would just bank with a central bank. And this would disintermediate the banking structure as we know it right now. It would disintermediate to a large degree or completely a fractional reserve banking system that exists today. And no one knows how that would play out. We'll have to see how that would play out as it goes. But the main thing here that I wanted to mention in this point is that essentially what will happen is that the digitized version will be on a blockchain, and it will be a distributed ledger technology, just like Bitcoin and or cryptos, except the very huge philosophical difference is it'll be a closed garden distributed ledger technology. It'll be a closed garden currency, meaning all of the power and all of the playing will be done with one individual or a group that decides the economic policy for that. So the controls of it will be down to literally probably just a score of people or even less than that. So it is very, very controlling in nature. So on to number two, another major economic fintech trend is that now institutional investors are just pouring into Bitcoin and cryptos. And we see this really as they're gaining confidence in the regulatory structure. We've seen greater innovation and greater definition of regulation through the SEC and other regulatory agencies. We've seen BAKKT, which is BAKKT, was launched in 2019 by the owner of the Intercontinental Exchange and the owner of the New York Stock Exchange. And they've been doing a fair amount of trading on there, not in Bitcoin, but in Bitcoin futures or Bitcoin derivatives. And they're dabbling with the price discovery of Bitcoin. It's not truly related to Bitcoin. It's more related to just casino betting on its price. So it's very, very, very different. But it is signaling more and more. I mean, look, so many of you who have 401ks, you have it under Fidelity. Fidelity is a multi-trillion-dollar financial organization. But even them, they came out with recently a 19-page and a 29-page Bitcoin Thesis report. The latest one was in October, and in there they defined or asserted that Bitcoin is now a alternative investment, which is vying to become a recognized asset class. So it really, wow. I mean, they're soliciting that information from economic experts, financial experts, and trading experts. And so the long and short of it is we've seen like the Michael Saylor-led MicroStrategy. They put almost $500 billion from cash into actual Bitcoin. We've seen recently in the last 2 to 3 weeks, Square, Jack Dorsey led. They bought $50 million worth of Bitcoin. I just saw a report yesterday or today. JP Morgan, I think, correct me if I'm wrong, I think they have 17,000 Bitcoin, with off the top of my head would be about $170 million worth of Bitcoin. And here, coming from, I mean, back a couple of years ago, Jamie Dimon was saying, "Hey, any of my employees who have Bitcoin, I'm going to fire them." And what? I mean, just downplaying the price of it so he could buy. Just a straight hedge play. But so we're also seeing other really large amount of institutional investors. I mean, a seminal figure, a iconic figure in Lower Manhattan, Paul Tudor Jones, saying, "Hey, I have 1 or 2% of my investments into Bitcoin." Really, it is not into Bitcoin, but into Bitcoin derivatives, which again is more of a casino play instead of holding actual Bitcoin. But that is really going to uptick the price pressure of actual Bitcoin like we haven't seen since the beginning of 2018. On to number 3, decentralized finance. To sum it up, really what decentralized finance means is for you and I to actually choose to invest with or to bank with whoever we choose. We could have any number of scores or hundreds or even thousands of different individuals, so to speak, who we could choose to bank with. So it's completely juxtaposed to the notion of a central bank digital currency where we are caught and become captives and slaves to a particular blockchain of which a very, very few number of people control the monetary policy of. In decentralized finance, with a simple nuance of you or I simply knowing the contract, what's known as the contract number of a particular coin or token or project, and you can get that contract number on CoinGecko or CoinMarketCap or etherscan.io. That's etherscan.io. You look it up, say Bitcoin or Ethereum or Uniswap or Yearn Finance or Trust Swap or any particular interested project that you have, crypto.com or Cardano or whatever, and you copy paste that contract number. Now, it's very, very important that you have the actual number, and the best way to find out is go to one, CoinMarketCap, CoinGecko, or etherscan.io, for example. You can find when you get that contract number, what will pop up is you can see how many transactions have taken place in that project and the dollar volume of the number, how many dollars is floating, is being traded. You have to be very, very careful because in the wild, wild west of decentralized finance, anybody can take the same identical ticker number and make it look like they are something that is actually fake. But a fake one, you can tell when you look up the contract number, it'll look the same, but it'll have a different contract number, but it'll show the number of transactions. And sometimes there's as few as 3 or 7 or 10. And really what that just says is how many people have been scammed. I've seen plethora of them that they look, they literally have only 3 or 7 or 25 different transactions or 200. And very, very, well, I wouldn't say millions of dollars is small, but when you compare that to, say, a Uniswap that has hundreds of millions of dollars that's been transacted and probably tens of thousands of transactions, you can tell that's the real one. So then you copy paste that and you go on to a decentralized exchange, and then you bring that up, you load that up, and you are availed the opportunity and the virility for you to trade your Bitcoin for that or your Ethereum for that or what have you. And you can essentially bank with whoever you want. And as I mentioned, that just, you see how that is just completely different from what they're trying to do. So that's kind of it in a nutshell. I'll leave show notes to lead you down to additional information related to some really good sources relating to CBDCs, to institutional investors coming in, and to DeFi. And I super appreciate your time. Just a lot of words for thought. Again, please like, subscribe, and click that push notification so you can get these videos. Really suggest that you go to a playlist on my Crypto Zones channel on YouTube, which is entitled How to Speak Bitcoin. I have 4 videos on there already. They're fundamental, but they're there for those who want to learn some more. And these videos are essentially designed just to help people become more competent at the water cooler, if you will. So I wish you well. I wish you wealth. I wish you health. # LoveAllServeOthers. And until next time, peace.